this computer. Awesome. Okay, cool. Well, welcome once again, ladies and gentlemen. Thank you, for the continuous support at this point. It's really much appreciated. Obviously, there is a little bit of money to be made here for me, but ultimately, man, this is such a cheap way to just refine your edge in the market. And yeah, kudos to you guys for just taking the chance and doing this. And hopefully this is the third or fourth one for a lot of you guys, and starting to get some real golden nuggets out of everything I'm doing here. But yeah, just want to say, obviously, thank you for the continuous support. And I do want to mention this once right now. I will mention it one more time at the end. This is the last one that I'm doing for the next 8 weeks or so. I may slip one in, surprisingly. We'll see how it goes, depending on how busy and consumed by the masterclass I become. But do want to mention that the masterclass is available for November. I believe it's on the 7th is the one that I'm offering right now. I think there's 6 spots left, so it's not selling out as quick. It's totally okay. But I want everybody to know that if you really want to take this whole trading thing to not even the next level, but just to really consider becoming a professional trader and actually believing in yourself enough to kind of take that leap of faith, the masterclass is likely the one for you. The one-on-ones are good, but I mean, it's an hour. You can't get a lot across in an hour. So for anybody who is curious, I just want to say this once at the beginning, like I said, the masterclass is fucking cat. It's a 90-minute session every week for 6 weeks. On top of the 90-minute session, you get an extra 30 at the end to have a Q&A with me. You're also going to get a private Telegram group. You're also going to be able to interact with me, share charts for the 6 weeks that you are a part of the program. And in addition to all of that, we are going to be hosting a live session, basically with you guys mute everybody. I'm going to just mute everybody again. Okay, cool. But yeah, you'll get a live trading session with me, maybe a week after, maybe 2 weeks after, depending on how the group feels on which day works best for them. And the idea behind this is that we can do chart markups live together and essentially try to take the same trades as one another to be able to potentially get you funded. So that's it. That's the spiel. The rest of this, well, you guys can see it in the live recording. So I'm going to be focusing on August 25th today. Reason being is there was a couple little fake moves that I ended up getting a lot of questions about, and I think answering these and just kind of showing why I didn't take these moves is going to give you a little bit more insight as to how to kind of filter which moves to be taking. A lot of the work that I do is on the 1 minute chart, but don't forget about the 5 minute. Before I even share my screen, let this be like a disclaimer at the beginning. I use predominantly the 1 minute chart. However, the 1 minute is just the refined version of the 5 minute. I know that seems silly. It might seem, like no shit, but ultimately, if you're not using it, you can't really blame anybody but yourself. So just, we'll start sharing the screen and we'll just start looking at what I was looking at. So yeah, today we're going to be looking at August 25th. And depending on how much time we have, we'll look at some more recent price data or maybe go a little bit further back. But the 25th was just an interesting day that I seemed to get a lot of feedback from a lot of people on Instagram. So I just want to kind of address the most common occurring questions, I guess you can say. So let me just pull up my chat here. How the hell do I do that? Chat, there we go. Okay. And snooze you lose. Okay, awesome. So I am going to allow you guys again, if you would like to annotate, you can do that with Zoom, however you guys want. I will get rid of all the drawings once I'm done asking questions. And please just try to hold questions off right until the end, unless there's something super pressing. But I mean, ultimately, let's just get through this thing. Okay, so Back testing, I mean, as you can see, I'll just go to like the 4 hour and stuff. I mean, you can see that there's absolutely no drawings on here. I like to start with fresh charts and yeah, just conduct the lesson that way. And I might make some mistakes too. That's the beauty of this, is it's a back testing session. There's no money on the line, just about feeling out what we're supposed to be doing. Cool, let's go. So still admitting people 10 minutes into the fucking webinar. Can you believe this? How can I record? You're not recording. I'm going to be sending the recording out. So guys, last time I'm saying this, the recording is going to be provided by me. It'll be provided later on tonight. I'm not saying it again. It was literally written in the description when you purchase this. You know, pay attention. Okay, down in the bottom, August 25th. When do we start? 8 o'clock. So 7:30, let's just back up to about maybe this time right here. And here we go. So ultimately, this is how I look at my charts. I mean, as you guys know, I like using 15, 5, and 1. Are there times I use the 1 hour and the 4 hour? Absolutely. But for the most part, I'm able to conduct my bias and just kind of, not even bias, but just understand what the market is doing with the 15, because we are session traders, or at least I am, and I think a lot of you guys are switching. Ultimately, we are operating within the market structure of this area and this area. Capiche? Capiche. I mean, you could argue that we're in this structure right here. Sure, that's fine. But ultimately, you know, the most recent is within these two areas. So I guess without further ado, I guess we should start marking shit up. So anybody want to, so like I said, if we're operating between, you know, this area and this area, and ultimately we're reacting to probably something like this with a wick above to kind of sweep liquidity, you know, the demand level that we're expecting a reaction from is probably here, right? So that's fine. We're on the 15. So ultimately we can just kind of mark this out. And this is going to be like picture it as your rough copy or your first draft to be able to then refine further on the 1 minute. Okay, so demand zone here. Now, big question we always get, and sorry for you guys that have been in these in the past, but I need to make this abundantly clear. So the move that created the break of structure was facilitated through this wick. Okay, a lot of people ask, well, why isn't it this? Well, ultimately this went lower, and on a lower time frame, we're going to be able to see this wick as the down move before the up move candle. Okay, a lot of people ask this too. Why aren't we using the inside bar? Well, quite simply, if we took the orders from the inside bar, okay, and they have been represented by this wick to push us further, would you agree that no, even though it's within the same area, but this wick is ultimately where the orders sit from a demand standpoint? Okay, so right now, if I'm looking at this chart, I could say that, okay, ultimately we are reacting to supply from this area. Okay, that's fine. Yes, we've broken above impulsively. However, now that we've broken, we are essentially looking at the pullback. And hey, Tyson, here's a question for you. That's one that I seem to get quite a bit, is why aren't you putting a limit order on here? Well, for the same reason that, you know, we've just swept liquidity, created equal highs, potentially reacting to this inside bar up in this region or around that region. Very simple. I'm looking for some sort of a change of character to be able to go long. Okay, hopefully that makes sense for everybody, but I'm fussy. I'm fussy with my criteria. It doesn't seem like it, but I mean, these are things that I'm taking into consideration. This 15-minute POI does not even need to hold, right? So I'm looking for something like this to trade like that. Or on the flip side, I'm looking for something like this, breaks the supply, comes back down, mitigates demand, and away we go. There's only two options. I always say this. We're at a POI, there's two options. One option is up, one option is down. If you know how to trade both and you don't care about which direction it goes, it's a lot easier to take trades. Okay? Holy fuck, man. People are still just coming into this. Oh boy. Poor Canada, I say. Okay, 5 minute. Let's check it out. Okay, so right now, we could argue that there is a small amount of supply in the inside bar. And yeah, I mean, just for argument's sake, I mean, we could say there's two options here. It's always good to have a couple different areas mapped out, but ultimately there's a small supply level here. We could essentially refine this down to this wick. Reason being is because this is the last place that supply broke structure. Structure in this case would be breaking down this hammer. Everybody agree with that? I don't really care, to be honest. That's the way it is. In terms of my strategy, at least. Okay. And then we also have this area. And again, big question here is, well, why don't you take this? Well, would you agree that this is more than likely mitigated by this wick right here? I mean, it should be pretty abundantly clear that if we've come into this candle to take orders to break structure, the chances of us coming all the way up into here to come back down are not likely. But if we facilitate just this wick, which is the only place where the resting orders sit from a supply standpoint, then we can mark it as a valid supply zone in terms of the 5 minute. Okay. Now on the flip side of things, okay, obviously we're setting up for a bullish scenario right now. Okay. So we're setting up for something like this, possibly break down, tap in, and then we could maybe target this supply wick to kind of start. And then once we see, let's say, a break like this, well, then now we can start swinging for something a little bit higher. There's tons of mitigations that are sitting here, lots of liquidity generated. Ultimately, we got equal highs here. So, you know, our target could then be here. But it's about having realistic expectation in terms of where we are on the chart itself. So right now, we break above like this, we take a long, we come into here, then we could look for the demand zone to potentially sweep the high. Hopefully that makes sense. Okay, next, okay, we have a bullish scenario. So now we need to figure out a bearish scenario. And this is the only way to do it, in my opinion, because ultimately, if you're not prepared for both sides of the market, it's going to be very, very tough to know what to do when the market doesn't produce this and all of a sudden it just produces this. Now what? Now where's your target, right? Because now that you're scrambling and you're expecting bullish order flow and all of a sudden it breaks down, well, where's the target going to be? So first and foremost, let's figure out where the unmitigated levels are, right? So ultimately, there is probably something unmitigated in this area right here. Ultimately, we can't really see it right this second because, we have like partial mitigations done here. So let's just mark it out. And then from there, it's always good to just see on the 1 minute where the resting orders could be. So before I get too far ahead of myself, let's say we do break down. Okay, this is obviously no good here. This has already been tapped into a few times. Let's just go down to the 1 minute. Just have a look at what's going on. Yeah, there's nothing really here. So that's no good. That's not a valid area. Okay, so let's take that off. That's fine. And then let's go over to the 5 minute again. And let's maybe talk about maybe this area over here, right? Okay, so we have this. Okay, this has been tapped into on the 5 minute, right? But let's just see what it looks like on the 1 minute. Maybe there's something we missed, right? The whole idea behind this is to refine, right? So that's what we're trying to do. So like this. Same thing. We don't really have very much. There's nothing that's unmitigated at this point. So let's get this off here. And what I want to do now is just scroll over to the left and be able to figure out, oh, well, this is pretty easy to figure out. I mean, do you guys see anything that's unmitigated in this area that we could potentially use as a target on a bearish scenario? If you can, yeah, pretty easy. Pretty fucking easy. And again, like guys, here's the thing, as we tap into this, we could just produce a reaction, create supply, and then off to the next one. The whole idea behind the strategy that I like to use is target something that makes sense, that could produce a reaction to either go long or short, because the entire strategy is based off of, okay, if we tap into this and we break down, we have a new trade. If we tap into this and we break structure to the upside, have a change of character, well, now we have a demand zone to play from. So if you set yourself up to target areas to be able to give you a trade in either direction, when we end up achieving that level, it becomes very, very easy to continuously take trades. Cool. More people joining. 19 minutes in. Wow. Awesome. Hey, newbies that just showed up 2 minutes ago. Show up on time, please. Thank you. Probably won't, but hey, you should. Don't waste my time. I won't waste yours. Okay. But it didn't break any structure. It's not about breaking structure. It's also about just understanding where resting orders are, right? Would you agree that we broke structure here? Where's the origin of that move? Like, you could argue that this was it. However, we didn't break anything afterwards, right? So liquidity, right? So that's what I'm looking at. Again, this is not to take a trade to the upside off of a limit order. Like, we're looking to see a reaction at this level. Why? Because there's resting orders sitting in this. I hope everybody's on the same page with me here. I'm sure the guys that have been here for the last 3 or 4, I'm not looking to put limit orders on this. What I am looking to do is take a reasonable profit taking area. That's it. Okay. Okay, let's move. So just to stay tapped in, we are all just waiting for the reaction of these areas. 100%, man. We're looking for reactions to possibly trade. Because isn't that the whole point of trading, is we trade reactions? Oh my God, somebody else is just getting in here. Okay, sorry guys, this is taking a little bit of time, but I want to do this all in real time so that you can see what it looks like. Otherwise, what's the point? Just showing you markups, right? Okay, so we're on the 1 minute. Could we refine this demand zone? I think so. Why the hell not, right? This is the origin of the move that broke structure, right? Cool. So right now we had a 5-minute POI, right? In this area, this little inside bar or whatever, we had refined down to the wick. So you can kind of see that this is like a range, you know, on the higher time frame, which was indicated by the inside bar. And then, you know, we can kind of see that this is where, you know, demand and supply kind of battled it out, and then ultimately supply took over. We've now tapped into demand, right? So fuck, man, people still just showing up. Oops. Okay, get rid of this stuff. So ultimately, if and only if we, oops, that's not good. I don't want that. So question, yes or no? Okay, if we break above here, are we looking for longs? 100%. 100% we are. Why not, right? Now, if we break above here and we tap into here first, can we put a limit order on this demand zone? No. Okay. I know this is baby questions, man, but it's just good refresher. We're just getting into the session. Okay, so now the question would be, okay, if we, let's get rid of this, let's get rid of this, let's get rid of this. Okay, get rid of this, get rid of this, get rid of this. Okay, so ultimately, let's say, for argument's sake, we come up and we tap into this and we start to pull back, okay? If we break through here, this creates demand to trade from, right? On the flip side, if we tap into here and we start pulling back to the origin of the demand, obviously we've just established that we cannot take a limit order. However, in my trading plan, the way that I can take this order is if I see some sort of a change of character afterwards. What this would tell us is that we did not have enough supply in the market to take out demand, and we've also caused now a substructure supply to be able to be broken, which now created demand to then target this high level, right, to potentially see a sell-off from it. And then on the flip side, we would look for a change of character here, or potentially see a pullback and then break above, and then we could start targeting highs. So again, the whole idea behind this entire strategy is to be able to have a trade no matter what happens when we hit a POI. Okay, I think that's why you all love it. That's also why I love it. So right now we are in demand. Okay, so let's play price and let's start talking about this. Okay, so what do we got? Equal lows, right? What do we know about equal lows? Resting liquidity, right? So that's cool. Let's play price a little bit further. Okay, so we start pushing away. So what does that mean? Well, we've created demand, right? So where's the demand level? Mark it out. Easy, easy peasy. Now, okay, so question, yes or no? Could you put a limit? Okay, so we haven't broken supply yet, right, from the 5-minute. So in my opinion, no, you can't. Okay, and the reason why is because the only job that demand has is to take out supply. So unless we prove that we've taken out supply, yes, you could argue maybe this inside bar, but ultimately the 5-minute structure point is right here. So change of characters, I usually like to see something a little bit more. It depends. The other thing that I would want to consider is if you've answered yes, would you not consider that this right here is a demand zone where now you've become liquidity? So if you have resting equal lows and we break this area, are you taking a trade here? There's liquidity right here, right, on the equal lows. So what's the chances, like if you take this trade, okay, and we go something like this. A lot of people took this trade because I got, fuck man, at least a dozen messages. Why didn't you take this? Well, I mean, first of all, we didn't break this, but would you now agree that you've become liquidity? I mean, shit, you got to be very careful about the equal lows, right? More people trying to get in here. Holy fuck. Okay, so do we have a demand level? Yes, we do. I would agree 1000% that we have a demand level that rests right here. Now, for the same reason, in order for me to be a little bit more skeptical and me to really just be in a good trade or a potential good trade, I would need to see this broken. And if we came back down to here, I would want to see a change of character to be able to then target this supply zone. Would you agree or disagree? It doesn't mean that I'm right. I'm just saying that it doesn't really make sense to put limit orders on areas where you could potentially become a part of the liquidity, right? That's all I'm trying to illustrate here. So this is a good piece of price action because did I think about doing this? Of course. But as soon as I start creating this narrative where I start to talk to myself and literally talk through what's going on here, becomes abundantly clear that if you were to put an order here and your stop loss is here, you are a part of the problem that demand will not be able to overrule supply. Okay. Yeah. Okay. So let's play price. Who's got their fucking drawings here that isn't taking them off? Clear drawings. How do I do this? Annotate, clear all drawings. Okay. Alrighty. So where were we? Let's see what happens, right? So play price. Okay. Start to pull back from supply. So here is where, okay, if we pull back from supply and we fail to break demand, this would be known as a supply to demand flip, right? So, oops, that's me doing that. Let's go like this. Okay, so let's get rid of this, 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 get rid of this. Okay, now if we pull back, we push through like this, and then we create a demand level, could we take this? Yep, cool, awesome, pretty simple stuff. Clear all drawings, okay. So let's go like this, get rid of that guy. Awesome. Okay, so at this point, that's what we're waiting for, correct? I mean, there's really, that's the option that's available to trade right now. So let's play price through and then start talking about what's going on. Okay. Okay, perfect. So, oh, equal lows again. We haven't broken supply, right? So, even though we've broken through impulsively, could you put an order here? Absolutely not. Why? Well, first of all, we haven't broken supply, but now we have broken supply. So where's demand? Cool. Miguel, you're on it. Exactly. So clear your drawings up and let's talk about this, right? I'm not clearing your drawings. Go for it. Have fun. Just kidding. I guess I will. Okay. So demand is in control from here, right? This is the origin of the move that broke structure. We have not mitigated this demand. The problem with this demand level is the same problem as the first one. We got resting liquidity, right? So would it not make more sense to wait for some sort of a change of character, break structure, and then we could target this? And then if we pull back like this, we can now create this to then go higher. But ultimately, like, yes or no, is there a limit order being placed on this? You fucking better not, because if you do, you are a part of the reason why demand is going to fail. Because if your stop loss is here or here, you're fucking toast. Why? Because I'm sure there's more resting orders underneath these lows than there will be going above here if we pull back. The market's got one job. The only job that it has is to collect orders. When you start to view the market from this standpoint, and it's not about where your stuff is or how good your analysis is, it's about collecting orders. I say this all the time. You have a t-shirt, okay? Let me draw a really bad t-shirt. There we go, okay? But you don't want to tell this guy that you have two, okay? But you actually have two t-shirts, okay? And you got somebody that wants to buy them for $10 here, $15 here, and $5 here. Who are you going to first? You're coming here because there's more fucking money to be made here. Okay, that's how the market works. It doesn't care where your stop loss, where your take profit is. What it cares about is collecting orders. And if there's more orders here than there is here, it's going to collect these first, then these second, and then go up and collect these ones. It's all about the best price. It's all about what they're getting. Cool. So to take this trade, we need to see something like this. And the problem that a lot of people bring up to me is, well, what happens if it goes like this? Well, I don't really care because I'm not taking an unnecessary L on something that allows me to become liquidity. Because if you trade supply and demand and you want to become liquidity, ooh, I don't know, man. You better check your mentor because that's not something I'm taking personally. Okay, so let's do this. Let's start playing price and understand what the hell is going on. So keep in mind, we also have a bearish scenario, right? Where ultimately we've seen a break of structure, right? We've seen a break of supply at this point. And if we come back down like this and we crash through, now we're prepared to take the short. So if you are not lining up your charts in a way that you can take both buys and sells, depending on where you're at in market structure and what's happening on the 1 minute chart, you're doing yourself a disservice, because if you are not prepared for both sides of the argument, you're going to marry your bias and you're going to get fucked on both sides of the market. So always, in my opinion, of course, have a bearish and a bullish scenario no matter what happens, okay? And if you don't have a trading plan, you better make one, and you better go back and watch the 3 videos that have basically been released. You'll have 6 hours of content. If you can't derive a trading plan from that, then book a one-on-one because you're going to need one. You're going to need one if you want to take this seriously. Okay, let's do this. Okay, so right now we're tapped into demand. So what do we need right now? What needs to break for us to take a demand trade? 100%. 100%. It's the inside bar. It has nothing to do with this, okay? Has nothing to do with this inside bar because this has already been partially mitigated here. The only portion that's not mitigated that has supply sitting in it is this level right here. So if we do this and then come back up, here's our demand. Where are we targeting? It's the next unmitigated level, right? Because technically, would you guys agree or disagree? Yes or no? We are heavily counter trend when we're moving this way. This is a 1 minute trend, okay? This is a 1 minute trend, but it is bearish. So until we break some substantial swing point, it's going to be very hard to decipher whether or not we have a reasonable change of character to be able to target higher profit taking areas, okay? Okay, let's do this. Let's map this out and see what happens. There's only 2 options. I mean, at this point, we either break supply, okay, and create demand, or we break demand and create supply. There's nothing else that can happen, but you need to have the mentality going into your trading session that there is only ever going to be 2 options that you can trade. So if you think that, oh, we have to be bullish because we created an order block, we broke structure, you're an idiot. I'm sorry, but you need to check yourself because anything can happen. You need to be able to see what's going on. Can't see your screen. Can everybody else see my screen? Yeah, okay, cool. So, no, I see it. Okay, awesome. Thanks, guys. Somebody was saying that they can't, and yeah, it seems to be available for everybody else. Okay, can we take a change of character and flip before breaking the inside bar supply? Well, change of character flip in terms of what? Why don't you draw it on for me so that I can understand, Nico? In order for a change of character to happen, yeah, go ahead. Go ahead. Okay. Well, yeah, of course. That's the scenario that I'm saying that we can take, right? And that's the only one that would be valid here, because otherwise, taking a limit on this is gambling in terms of liquidity, right? So if we see a break above this level, we don't need to actually see a break of structure, but if we see a break like this, and that disrespects supply, unmitigated supply, we can take the change of character, absolutely. And it's just about having realistic targets, because if you just target here and then all of a sudden we start breaking demand levels on the way down, you don't have to take a hedge position. You've already basically taken your profit, and now you can take shorts to wipe all the liquidity, which might just sweep lower to then break this structure again and cause the actual change of character to target the new 15-minute highs. So it's just about, especially at the beginning stages, we don't know if a chalk is going to take out the high, or if it's just going to mitigate unmitigated supply and then go lower to have a larger time frame, sweep, which is essentially equal low sitting here, and then end up breaking to the upside. So just a matter of, and again, this is totally my opinion, but it's always good to have realistic expectations of the market, so that when you do take profits, if we break above like this, we create new demand. And if we decide to, go like this and then break a demand level in a supply, well, now all of a sudden we have a change of character to the downside and just have realistic targets of equal lows. Hopefully that makes sense. If it doesn't, well, hit me up at the end of the lesson and we'll see what we can talk through. Okay, at this point, what are we expecting to happen? I mean, realistically, you guys don't have to answer, but there's liquidity at both these levels. You know what I mean? Like it's pretty well fucking game over for this low. Okay, even though we had to break a structure, how many fucking guys sitting here taking this? Well, there's too much resting liquidity below, and now we have liquidity built up with the mitigations, right? Only job this demand level had was to break supply. And if it can't do that, what's going to happen? Supply is going to take over. Okay, so let's go like this. I'm going to get rid of this guy, and we are going to talk about this guy right here. Okay, supply. Let's do this. And we're going to take this across like this and play price. Okay, like easy peasy. I mean, if you didn't expect this to happen, I mean, yeah, I don't know. Bing, bing, bing. So we have officially broken. We have officially broken. So now, if we start pulling up like this, okay, can we take a limit order supply trade from here? It's a no. Does for the guys that answered yes, and for the guys that answered no, kudos to you, because I'm sure you guys are the ones that have been around here, for the last few of these sessions, and it's fucking fantastic that you're catching this, because these are little details that people don't, they get overlooked, right? Even though we broke a demand level here, the problem is that we are still in this demand level, right? So in order for us to take a limit order here, we first need to see a change of character to then go lower. We cannot put a limit order while we're in a demand zone on a supply zone, right? Even though we're not expecting this demand level to hold, it goes against the rules. These rules are not subjective. These are the nuts and bolts of the entire strategy. So I hope that's very, very clear. Okay, so give me a second. I'm just going to see if there's any. Can you explain S&D flips? If the last demand marked took that liquidity rather than leaving equal lows as it did, then broke, would it limit be valid? Well, if we broke this low, like here's the bullish argument. If we broke this low right here, very simple. You can put a limit order here all day long. Why? Because this is unmitigated supply. And if we break above this for whatever reason, it's a change of character that we can then take a demand trade into here. You're not going to be right 100% of the time. You just have to trade your rules. I'm not going to answer a bunch of questions right now, guys. I'm going to wait till the end. Sorry, but let me get through this session. We'll see if we clear things up, and then we can talk about things at the end. Okay, thank you. Let's push forward. Okay, so ultimately, what are we expecting? We're expecting a reaction. We're depleting the last of the orders that are sitting in this demand level that broke a shitload of structure on the way up. So we're expecting to have resting orders in here. If you don't, I mean, shit, man, check yourself, because there's going to be resting orders. This is a huge level of demand in terms of 1, 5, and 15 minute. More people getting admitted. Jesus. Okay, so at this point, what are we doing? We're creating equal lows, right? So what are we doing here? Creating equal lows. Do we have cause for price to go down to our demand level that we were talking about? Like, shit, I think so. You'd be silly not to think so, right? So let's just go like this, and now we're going to figure out if we can get into some sort of a trade, right? Okay, so we start pushing. Oh, look at, now we're reacting to demand, right? So this is not an area that we could take. And the reason it's not is because this low, or sorry, this high right here should have taken out this low, and then we could have seen supply get broken, which would have caused a proper change of character. In my opinion, this is not an area to be taking demand trades from, because yeah, hopefully that makes sense. Okay, what are we doing? Equal highs, right? What do we know about equal highs? More than likely, we're going to get swept. Okay, there's the sweep. Still can't put a limit up in this region. Okay, it doesn't even mean we need to go up this high. The whole idea is be safe with your capital. Understand the risks that are involved with taking these kinds of trades. So the bullish argument is we need to break here to create demand, because we haven't created a new low from any of these highs, right? We haven't broken supply. We've broken, maybe substructure at this point, but don't you want to be more certain of your trades? I think it would be silly not to. So do what you want, but this is my opinion, okay? So at this point, okay, we're basically trying to gain demand, right? We're trying to break this supply that swept liquidity. And this is a tough one to see in the moment, because you're looking for a bullish argument more than likely. More than likely, you don't even have this bearish argument set up, right? So let's mark this out exactly how I would mark it out in real time. So ultimately right now, we got resting liquidity that's sitting right here. We've just swept it. So what does that mean after a sweep? More than likely, we're going to create supply to break structure, right? So let's go like this, liquidity on the top side. And then you got to remember too, that now we also have liquidity on the bottom, right? And I know liquidity is at every low, every high, every trend line, but it's about just being realistic about what's happening. We've created equal lows. We've failed to break supply from demand, and we've broken demand levels after we did break this supply level here. So what are we expecting to happen? Well, right now we got to see, okay? So at this point, right here, okay, interesting stuff. So we got a wick break. So what does that mean, right? Do we have any demand sitting in this level right here? Y or N? Pick one. Fuck no. There's no demand left in this. We've already mitigated all this. We've mitigated here. There's nothing left in the market to bring us higher. Does it mean it can't happen? No, it can. But I'm telling you right now, if you're going to sit here and fucking cross your fingers on some sort of little wee wick, oh man, I'm telling you, you better stick to a casino. So here's the thing, okay? Would you consider, and I want you to think about this. This is where demand was, right? This is the only unmitigated demand level that we had, okay? So if we've gone further than that, and we've not mitigated a demand level with this wick, would you consider this a break of structure? I agree. I think 100% it's a break of structure. And the reason I think it's a break of structure is because demand in this entire area right here, this entire blue area, had one job. And the only job it had was to take out supply. And it didn't do it. So this, for me, is a break of structure. Even though it's a wick. Don't be scared of wicks. You just need to know which wicks make more sense, right? So what do? Where's supply right now? Where can we put a limit order if we had to put one right now? 100%. Good for you guys. Awesome. Awesome, awesome, awesome. Now, okay, we put a limit order. Okay, let's do it. Right at the beginning of the block, 1.4. Realistic target. Okay, so if we push like this, we know that there's supply sitting in here. I mean, you got to be an idiot to think that there's no supply sitting in here. Oh shit, hold on here. Clear all drawings. Okay, get rid of this. Well, so think about this. I mean, if you're worried about this wick right here, okay, Would you not agree that we would have to break supply to get to that wick? What caused demand to break? It's this. This is the reason demand broke. So if we go higher than this, okay, would that not mean that this is now new demand? Exactly. I hope everybody's with me. I'm not trying to be an asshole. I'm just trying to like rationalize thought process so that we can understand collectively why the market moves the way it does. It's not about my opinion. It's about understanding what the market is doing. Dude, I'm just a bystander, just like any one of you guys. So let's play this out. Let's see what happens. We got tons of liquidity. So when you think about what happens from a demand zone to a demand zone, if there is all mitigated demands on this side, what is happening between here and here? Somebody print it out right here. Right? The whole reason why we have a demand zone and a demand zone is because these are areas where there's no resting liquidity. It's a demand zone. So in between the two areas, that must mean one thing. There's only liquidity to be taken, right? So if that's the case, like I said from the beginning, if we have a bearish scenario, which we do right now, and we tap in, where is the next place that we could see a reaction? Like, that's easy. That should be really easy. Does it mean that we need to see anything to break? No. But what it does mean is that more than likely, if we tap into it and then we see a change of character, we can then target these areas, correct? Okay. Flip-flop, flip-flop. You know, follow the money. Follow what's going on. Play price. Okay. Tapped in. How many of you guys are watching this fucking candle and you see this huge bullish hammer and you're freaking out? Me or not me? You shouldn't be. Why would you freak out, right? And here's the thing is the market is a machine. All it does is collect orders. Do you think there's enough orders here to push us further? I mean, that's what the whole trade idea is based around, right? So let me show you. Okay, you start to see this. Now are you feeling better? Yeah. But this is the beauty of understanding what the market does. Okay, it needs these orders here to then push further down. Okay, so fucking hell, I do this every time. Okay, let's get rid of this and get rid of this. Okay, so at this point, okay, now you're freaking out again. But here's the thing, we're just grabbing more orders, right? Okay, we've tapped in, that's fine. And then we start to push, right? So at this point right here, stop loss at break even. If we come up higher to mitigate this wick, like I'm okay getting out of the trade. Personally, that's too risky for me, especially with the equal highs here. Make sense? So, you know, this is about having realistic expectations. You remember, like we can have a demand zone maybe down in here that for whatever reason, you know, you're swinging for the fences down here. I don't know why. Target unmitigated demand or supply zones unless you're aligned with the higher time frame. Okay, so right now, ultimately, what are we expecting? We expect that if we come any higher than this, more than likely, we're going to sweep equal highs and take a -1, which is then going to cause this to become demand that we can then target supplies. Okay, that's all I'm trying to say. Have a bullish and bearish scenario for everything that comes up. Okay, so we're going to push down. Boom, we've tapped in. Okay, you know what the beauty about taking profits at realistic levels is? Now you get a brand new outlook on what the market could potentially do for you. Okay, that is the beauty of trading this way. It's about being able to reevaluate, because if you got to start taking long positions now against your and you took this take profit way the hell down here, and you got to start hedging positions, you know what happens to your psychology? Now all of a sudden you're hedging this way. You don't know if this is going to hold. You take a -1 here, and then all of a sudden all we do is sweep and then take you out on the other side. Whereas if you looked at this and then you took this demand trade and then targeted the liquidity that you've basically created from your previous stop loss, you've now taken money on both sides of the market and you've been able to profit from both. So just a matter of having realistic targets, 1 to 5s, 1 to 7s, 1 to 8s, 1 to 10s, depending on where unmitigated demand or supply sits. Because all it's going to do is provide a reaction. And a lot of people are asking, okay, well, this random fucking unmitigated demand from way the hell over here, okay? This random thing that arguably didn't really break structure, but it broke a bunch of supply levels, right? Broke a bunch of supply. This does not need to produce a reaction that needs to take out the high. All it needs to do is break levels of supply to take confirmation entries from, right? So, and again, if you have a realistic target of this supply level, and then you can reevaluate what happens from here, either take this or come across like this, right? And we come in and all of a sudden we sweep and then come down, break this. Well, now you know that this demand level couldn't break supply. It may have broken this supply, but now supply is in control. And if we have a demand level that's maybe a 5-minute POI here, maybe you could first target this to see a change of character to then target the liquidity that you just created. Makes sense? Yes or no? Like honestly, and I'm going to allow for a couple questions maybe right now that pertain to what I just said. I don't want to, like, if you're going to ask me what a demand to supply, like, pertain to what I just said. If there's a question or you're not sure, you can ask right now, just type it in. Don't be an idiot and ask something that doesn't have anything to do with what I just asked though. Okay, nobody. Cool. Awesome. That's what I like to see. Okay, clear all drawings. Okay, so at this point, 2 options. There's only ever 2 options. Are you guys sick of hearing me say that yet? There's only 2 options. It's the truth though. We go like this, we break down, right? Or we break through and then create demand and then target up here, right? Okay, doesn't mean that we're gonna have a trade that meets our criteria. It just means that these are the only 2 available options. We go through or we go through, right? Up or down. Yeah, I mean, ultimately, you could say this. You could be more conservative and say this. Totally up to you. You know, you could be really conservative and say, I want to see this break before taking a bullish trade. Totally up to you, but just create a narrative. And based off of the narrative, okay, if this supply level breaks right here, we come up like this, where's your first target? Probably the wick. Now, if you wait for this wick to break and we come back down, where's your target? Probably up here or up here, right? So waiting for criteria to be met and knowing how to act upon it creates higher risk reward scenarios. So like I said, just to reiterate, if we break this supply level, where's the target? Bingo. Okay. If we break this supply level and don't touch this one, where's your target? It's here. It's this one. Now, if we break, here's the thing. If we break this one right here, okay, we take the trade. Okay, what you could do is wait for reactions off of supply levels and trail your stop. Okay, this is just a different way to manage the position. So you can swing for here, but you need to know how to manage it. And that's a whole other thing. And that's not something I'm going to teach during webinars, unfortunately, because this is what people pay thousands of dollars to learn, is the different management styles. But just know that if you have a target of way up here even, all you got to do is remember how to manage it. And know how to act if we do manage it. Because if we tap into here, see a change of character, we get taken out here. Now we create supply. Now we target equal lows. Okay, that's all I'm going to say. I'm not going to say anything more. Okay, so let's play price and talk about what is happening. Okay, we're getting the reaction. We're depleting demand orders. Why are we doing that? So that one day we're going to be able to come and run this for liquidity, right? Which is going to fuel the move to the next unmitigated demand level. So at this point, you know, we could mark other ones, but really we're expecting some sort of a reaction. That's the whole reason why I marked this zone and not any other zone over here, is because this is the one that I'm expecting to see some sort of a reaction. And then if we end up breaking through like this, you're going to have all kinds of time to figure out your supply zone. Okay, minutes, 15, 20 minutes before we come up. And then you can go over here and you can say, okay, well, where's the next unmitigated demand? Where can we draw this out, right? And then have that as your target, and then look for a change of character to go long into the supply level that you just took your trade from. Rinse, repeat, rinse, repeat. Cool, awesome, good stuff, excellent. I don't use the seconds charts. I use everything on the 1, 5, and 15. Why? Hyper focus on 3, and man, some guys got like 15 different fucking time frames. And in my opinion, if you need that many time frames to see a potential trade, it's because you're looking for a trade way too hard. You're looking to justify your opinion on what a trade idea should be because you finally had your POI met. Okay, So fuck it, just let's hyper focus on 3, maybe 4. Okay, so we're tapped into supply. Okay, we're going to see a pullback. Okay, there you go. So now we've broken through supply. So where's supply and control from? Or sorry, where is demand and control from now? In my opinion, I think it should be here. I think it should be this level. And the only reason why is because this is technically where supply turned into demand and broke through. So you got to remember now, if we came through like this, we would now have supply that you could only target this level. The other thing that I want to consider at this level right here is the equal lows, right? So anyways, if you're unsure, okay, let's say there's something in here like exactly what we have right now, and this is too noisy, you don't know which level to take. What could you do to get a clearer picture? Bingo. Bingo. I am so unbelievably proud of. I know this is like a very basic thing, but I feel like a lot of people just forget about the 5-minute. So if you look at this right here, this inside bar has already been partially mitigated by this, right? So this is the level that we're looking to take trades from, right? Because if you came down to this wick right here, what do you become? Liquidity, right? Cool. Your time frames are your best friend. Okay, they're going to give you a clearer picture if you know how to use them. Don't be using no fucking 3-minute, 2-minute, 4-minute, 7-minute, 8. Like, I don't know who does that. I do know who does it, and they do really well with it. I get it, but man, don't go forcing trades based on time frames that don't even make sense. So ultimately, this entire area is demand. But now you got to remember something. Okay, now we also have supply sitting here, right? So if we tap in to supply before we, so right now we could have our limit order set in terms of we are reacting to a demand level and we are not in a supply, right? So could we put an order? Yes, absolutely. Absolutely. Cool. Awesome. So let's do it. Okay, go like this, factor in the low. But now, what do we got here? 1 to 2.64. Is that enough risk reward for you guys? No. At this point, do you want to like do something like this? Or do you want to just wait to see the bigger move? Like these are questions that you like, these are real life scenarios that you're going to have to deal with. You're not just going to get 1 to 5s every single time that you decide that you know, my strategy works. Is it available to do it? So personally, I'm staying out of this. And the reason being is because, one, we're getting pretty close to a supply level and my risk reward is not there. I don't need to force a trade. Cool. I hope that makes sense. It's not just me being a little bitch because I'm on a live right now. This is realistic. These are scenarios that you're going to have to deal with. Okay, so could have got tapped into the trade. However, the risk reward wasn't there for me. Okay, so we've come down, we've printed equal lows. We've now swept the lows, right? So let's see what happens. We've swept again. Like there is no trade for me at this point. This is all mitigated. This entire, like even a supply trade, like we did not break a structure point. We've swept below it. But personally, like this doesn't really mean anything. There's nothing clean for me to take. I hope that makes sense. So boom. Okay. So we've broken supply. Where's demand? Okay, cool. What could we do to make sure that we're on the right demand level? Cool. I like it. Good for you guys. So makes a lot more sense like this, right? Awesome. Okay, so demand, we could just say that this is our POI. Agreed? Because there's only now 2 options, okay? We come down to here, okay? What are we gonna look for? We could either take the 50% of this, we could take the open, we could take whatever we wanted, and then target. Where are we targeting? Yeah, exactly. Cool. Awesome. Just clear these drawings. Okay, so take a limit, or we could also just like, because we're getting pretty close to this, what we could wait for is something like this, break structure, come back down, and then take this guy right here. Okay, doesn't mean you have to, just means that it's an option. If you're unsure of your analysis and you're in a position where, fuck, I don't know which one to take, wait for the confirmation entry. Like, that's how simple it is. And you know what it means though? It means that if you take a confirmation entry and we go like this and we never end up coming back into that level, we have unmitigated supply, wait for a pullback, wait for your criteria. If your criteria does not show you a trade, don't worry about it, because not trading is a trade. I'm telling you, like what a 1 to 30 win will do for you and what a -1 loss will do for you. I'm sure the -1 loss is going to affect you greater than the 1 to 30 win. So be very selective. You're allowed to be very selective. You're selective with what you eat every single day. You're selective with who your friends are, who you deal with on a day-to-day basis, who your work colleagues, who you interact with at work more than others. Dude, why would your trading be any different? Okay, that's all. Like, anyways, I'm not going to rant about this, so try not to at least. But ultimately, now you can see what area is of value. So let's leave it like this. Okay, just bring this guy over, bring this guy over. Those are the two unmitigated supply zones, right? So at this point, we could still have our order sitting right here. Let's just put it on for the sake of doing it, right? Put it at the beginning. Again, this is no good for me, 2.7. So I could either move this into a 2 pip stop, targeting this. Hey, Pedro, were you not just here for like the last 5 minutes when we talked about the POI? Not to be a dick, man, but that was like exactly what we just talked about. That's why we're not taking this. This didn't cause the break. Remember the 5 minute, exactly. The 5 minute, okay, question. Sorry, man, I know I don't want to single you out, but what has more power, 5 or 1? What has more power, 5 or 15? 15 or 1 hour? Okay, so you get the point. Thank you guys. And I'm not trying to single you out, bro. I just want to, I want, because there's people that are going to have the same question. Why don't we take this one? And this entire thing was based off the 5 minute POI. Okay, that's all. Thanks for asking. Sorry to put you on the spot, but this is how we learn. Okay, cool. So we've now tapped into supply. Can we keep this order on? No, absolutely not. Now, how we can look at potentially taking this trade is if we see some sort of a change of character, right? We could look at something like this, break this structure, take the demand, and then take out the mitigations that we just created, right? The other area would be something like this, take this as demand, and then target something unmitigated up in this region, which we can look at in a second. And then the other option is, okay, on a lower time frame, I'm sure there's a break of structure here. You know, let's deal with that if it comes, if and when it comes. Okay, so right now we are still in supply. Okay, we've created some relatively equal highs. We start pushing away. Okay, we come back up. Supply is in control from here, right? Because ultimately, yeah, that's like the refined version of what's going on. Okay, we come up, we tap in. Okay, here we go. This is where things get interesting. So, a couple options. Wait for POI, or it's like 9:20 in the morning. I only got like an hour and 40 minutes left to trade. Serious question, and they're, fuck, you guys are good, man. I love it. I love it. Could you take a trade like that? Like, honestly, could you take one? Why the fuck not? Why not? If we hit this first, then you're going to take the order off. But why wouldn't you have the order? Right? Supply, like we just broke structure. We broke it. We broke it from the refined order block, which is right here. I think it's awesome. I think it's sick that you guys are at least thinking of that. Does it mean it will work out 100%? No, but it does mean that there are resting orders that we pushed away from. So more than likely when we come to here and we start pushing away, what can you do? Move it to break even. At least you're in a trade. And if you go break even and we break above, guess what? Now we got new demand to target new unmitigated supply. Yeah, exactly. I mean, you could like you could talk about this as probably on a lower time frame. It's a break of structure. The main thing I was looking at here was, okay, this is something I was considering. Could you have taken this first mitigation? Yeah, that's pretty risky. That's dicey. But ultimately, what you need to think about is if we break this level right here, which essentially should have taken out the high after a bullish follow through. Once we start breaking down, we've got to remember that, you know, we've broken 2 bits of structure. What do we need to do? Let's go out to the 5-minute and understand what's happening here. This is our POI. We've broken above. We're looking for a change of character. In order for us to see a change of character, wouldn't we want to see this get met? More than likely. Cool. Let's go down to the 1. And yeah, are you guys okay putting in order? I took this trade, so I took this exact trade. I had no issues doing it. Come down into here. Okay, 1 to 6. Oops, just go like this to the top of this one. Yeah, 1 to 6. Okay. Could you factor in these wicks if you wanted to? Personally, I probably wouldn't, but just for the sake of doing it, let's no, fuck it. We're not even going to do it because that's not how I took it. I think I took it just like this. Okay, play price. Okay. Okay, this is not a break of structure yet. Okay, so you could be aggressive here and you could technically put your stop loss to break even if you wanted to. Now, what I like to see is this low broken. Okay. Depends on your risk management, depends what you want to do. There's no right or wrong way. You would have been very close to taking out there, maybe with spreads. Okay, so ultimately, now we're supply and control from. Bingo. So monitoring above this now creates a very, very powerful mindset for the next move, because if we get taken out at break even, it means we had to break supply. So if we break supply, what does that create? Demand, right? So, man, there's never, I don't ever want to hear somebody who comes to these webinars and says, I couldn't get a trade today. Like, dude, there's so much available all the time. If you just understand what the market is trying to do, what do we got to do? We got to come down here to mitigate demand, to be able to break supply, to then create a confirmation entry, to then go up and take out equal highs that we just created. Why? Because that's where the orders are. We only go where the most orders are. Okay. So at this point, we're at break even. Boom, tapped out. Pretty simple, right? Hope so. Give me a sec. I need to have a drink of water. But I'm not having. Yeah, so there you go. Exactly. So this is where ultimately supplies and control from. So this is an interesting part of this price action, if I remember correctly. So we're going to talk about it, obviously. So this is ultimately the level that needs to break. Okay, so let's talk about this. We've obviously swept below here. Let's go to the 5 and just see what's going on. Oh yeah, that's not going to work. Cool. Go to the 5. Okay, we can see that, like, ultimately the other thing that needs to be considered at this point is we've barely, well, we've tapped into this as well, right? Which is the unmitigated inside bar. Like, we haven't really, like, we tapped into it, we've mitigated it, but because we had liquidity sitting below, we can consider this as still, you know, just a sweep at this point. At least I can. You know, you don't need to agree with me, that's fine. You can have different criteria, but ultimately I'm just seeing this as a sweep. And I mean, the bottom line here is no matter what, this needs to break. You know, even if we came all the way down to here, if we broke this level, I would still be looking for demand trades. Okay, so let's get rid of this and let's play price. Cool. Okay, so we come up, we are now in supply. Okay. Okay, let's hear everybody argue about this. Okay. Right now, we've had a change. Okay, first of all, can we agree, yes or no, that this is a change of character? 100%. Okay, so now I guess it's a little bit of a rhetorical or a loaded question here. So if you've considered this as a change of character, okay, do you now believe that order flow is bullish? Obviously you do if you said it's a change of character, and that's fine. So in the context of this being a change of character, and now we've gone from supply trading to now demand trading, do you count this wick break as a break of structure? Cool. Okay, so here's where things are interesting. I agree. I do think that this is now considered a break of structure. And the reason why is because supply had one job, and it had the job of holding this level to then take out this level. Okay, so I would agree that this is a break of structure. However, I did not agree with it at the time in the moment when I was trading this. And the reason I couldn't quite grasp it is because everything here was mitigated. Okay, so I was scared that we would not come down and be able to break above, and we would sweep again, maybe into this unmitigated demand zone on the 1 minute. That was the only thing I was worried about. So again, there's rules, but then there's rules that contradict rules. And in order for me to play safe and be able to take the absolute minimum amount of losses possible, I needed, yeah, you could consider this wick, but this wick has been touched in by this one. But what we'll do is we'll put it like, you can now also argue that this wick has not been touched in as well, right? Or this entire inside bar, but this has been mitigated, right? So the whole thought process behind this. So I guess the question would be, would you feel comfortable with a partially mitigated wick being an area of demand that you would take a trade from? That's what it boils down to. Is if something has been partially mitigated, are you willing to risk your fucking money on potentially taking a limit order from here? Or would you rather see some sort of a change of character within a change of character to, take the trade? I think it makes more sense to take and I mean, I'm going to show you this in a second, but spoiler alert, this ends up reacting to this, and that's fine. And then never ends up coming down to here. Okay. But this is the risk we take. This is like, this is about, having some rules. Ultimately, we got relatively equal lows with a barely having a sweep. And we also have unmitigated demand here. So what I waited for was to see if this would have got swept, taken out supply, and then taken a risk order on this. Okay. Hopefully that's reasonable. Hopefully you understand why I've kind of got to that conclusion. And I think a lot of you guys are starting to understand that I am very fussy with my criteria to get into trades. Yeah, and that's it. Let's move forward. Let's see what happens here. Okay, we get the pullback. Ultimately, the only area that was unmitigated, like this is partially mitigated by this wick right here. So the only area, let me map this out so that you can see. Don't take my word for it. Let's show you guys, right? Look at this demand level. You see how small this is? This is the only unmitigated demand level that caused the break. Really, okay? This is the origin. So like the precision that is involved with the market, like you can't make this shit up. This is the only level. I wasn't willing to take this because ultimately I'm a fucking chicken shit when it comes to taking these orders, because I didn't want to become liquidity, right? Which is relatively equal lows, right? And we had a resting demand level underneath. But you can see how powerful this tool and this strategy really is, this wick, right? This is the only part that's not mitigated within the entire demand region. So what are we expecting? We're expecting a push to now take out supply. Where is supply and control from? Right here. Let's push forward. Boom. Okay. Demand, right? Maybe refined down to this wick. Some people might say this, but what do we need to do in order to filter what's going on here? Write it out. Tell me, what do we got to do? Bingo. If you're unsure of what wick or what fucking candle, guess what you do? You zoom out. You zoom out. I tell people this. I've had about 70 one-on-ones, and in like 4 weeks, not to flex. It's just, this is a recurring question of which one do you take? If you don't know which one to take, you need to be zooming out, because the higher time frame is going to tell you what you need to know. You guys want to map this out for me? Bingo. Bingo. So you could take the whole thing, okay? Or you could take the wick. Why couldn't you take the wick, right? This has already been partially mitigated by this guy right here. So just take the wick. Now, here's the thing. Are you willing to potentially be part of liquidity, or would you rather see, so would you take a risk or a confirmation entry based off of the liquidity sitting here? You know how much fucking money you're going to save yourself by taking the confirmation entry? So that's the whole thing, is like, no two situations are like, I get a lot of questions on, well, why do you take risk here but not here? And here's what it boils down to. If you're a threat to becoming liquidity at any point during your trading session, simple, take a confirmation entry. You'll never have to worry about it then, right? Don't become liquidity. Don't put yourself at risk of becoming liquidity, because if you do, here's the problem. We now come down like this and we sweep the low like this. You're looking for supply trades, but really all we did was sweep down into that unmitigated demand and then break structure. Now you can't take this one, you get stopped out on this one. Just have a narrative for both scenarios. That's all. That's what this whole thing is. That's like my whole entire strategy with the people that have literally paid thousands of dollars for the masterclass that's coming up. The whole strategy is be prepared for both. And it's just going to be going over that until you're blue in the face, because that's all it is. That's all the strategy is. There's a trade on both sides. Okay. Okay, let's do this. As soon as my chart loads, here we go. Okay, so right now, let's go back out to the 5. Sorry, my bad. And we'll mark this demand. Okay, nice and clean. Cool. Okay. Let's look up here, see if there's any unmitigated supply zones. Nothing really, other than like this wick. Yeah, the wick, exactly. I would say that's likely the only place that we could consider, right? Supply. Okay. Keep in mind, I just want to put this across here because, as you guys know, I trade in New York. So I want to put the end of the session here, just so that we can have an idea of how this all plays out in real time, because that's the whole idea of this, is to show you how I trade during the sessions I trade. So in all fairness, there would be no reason you couldn't put a limit order here if you felt comfortable, but because of what we just talked about, I'd much rather see a confirmation entry. So, okay. How many guys would you guys consider taking this? Good answer. I like it. Why? Because look at the 5. Is that anything? Like, come on, man. If you're like, that's a risky move. That's a really risky move. You could technically take this as a mitigation, but you would have to have like a target of here, and that's it. You know, like you can't be tripping out about like having like swinging for the fences. You know, use the premium and discount if you really wanted to with you know, the phantom strategy. But yeah, ultimately it's just it's no bueno, man. I don't like that at all. Okay. Okay, so we are literally right before a supply zone. What do we know about POIs? With everything that, like, don't answer yet, but with everything I've taught you guys, everything that you guys have developed with your edge from me at this point, do we have to meet a POI in order to take a trade? If we break a minor demand level on the way down and we don't tap into here and we break down from here, oh shit, my bad, hold on. Fucking hell. Every time, eh, guys? It's got to happen once per session. It's just the way it is. Let's hear it in the comments. You know, let's hear it. Everybody laugh at me. I do it every fucking time. God damn it. Okay. Back down to the 1. Let's scroll over here. Oh, fuck. Okay, here we go. Grab this guy and let's let's go like this. Okay. Sorry about that, guys. Okay, so at this point, simply put, I'm going to show you what I took. I'm going to show you the trade I took based off of everything I've taught you guys. Okay. This demand level right here, it has one job. It has to come in like this. Okay. That, like, if we start going lower than this, more than likely, we're going to come down to this, correct? And if we can't get a reaction from here, more than likely, we're going to go to the POI. That's the whole thing. So at this point, okay, this is a pretty small POI, correct? What could we do to just understand a little bit more about where this POI would be in terms of clarification? This is the 5 minute. Where should we be going? 15, right? This is a pretty big bullish leg. So we want to be able to understand what's going on and what we should be trading into. So if we go to the 15, you can see that this entire area right here, oops, was the area. Now, because we've mitigated with this wick, guess what? We can now say, and this is not a refinement, this is an expansion on our POI, right? So go down to the 1, and let's look at this. So that entire area is the POI in which we could potentially sell down to. So let's play price. Okay, we've broken demand. Okay. Somebody's just getting into this right now. Okay, you guys want to mark out what we should be doing? Why not, right? Why not? I agree. I would agree 100%. Doesn't mean, so you could either be taking this, and then on the flip side of the argument is, if you wanted to, you could look at this as a POI to go up. But ultimately, yeah, you could look at the wick. I mean, the problem with this is relatively equal lows on a lower time frame, right? So we might sweep like this and then come up. But ultimately, what we're looking at is this POI to get met. That was the entire idea that I had in my head. Does not mean it's right, and I'm going to show you what happened. But I want to show you this because I think it's really important to really understand how to manage risk and when to do it. Okay, so at this point, at this point, we've broken a demand level. We have a POI above. Are we expecting this to get met? More than likely at some point or another. But is it logical that because we broke demand levels so close to a supply that we could take a trade? Why not, right? This is the risk we take. Is this a riskier setup? I would agree. It doesn't mean that you need to take the setup. You could have waited to see the market show its hand. But because I quit trading at this level right here at 11 o'clock Eastern Standard Time, this is probably the last available trade that I'm looking to get into. We have equal highs sitting here. It's a little bit more of a risky play. However, it was the chance I was willing to risk, and based off of the idea that we broke a very, very small structure point. Yeah, we got liquidity there. Exactly. That was what went through my head. Is this a wishful target? A little bit, but here's the thing. If you don't get into trades, you can't make any money. Okay, so bring this over. Okay, and we'll just see when we get tapped in here, or if we do. What are we generating right now? Gives us reason to believe at this point that price is going to go down, right? We also have that, Miguel. Yes, exactly. So let's map that out as well. Because, we got this. Okay, we can refine this down to here and demand. Okay, cool. So we got liquidity built on both sides. We sweep the top side first. And as soon, so I'm not at break even yet. Why am I not at break even? We have not broken this, right? We have, but very, like barely. You could have put it here at this point, but I didn't. I put it there when we did this, okay? Because ultimately, where is supply and control the market now? The wick, right? Cool, awesome. So if we broke this demand level, this is where supply would be, correct? Because this is the origin of the move that broke demand. Okay, so let's play price. At this point, like I said, break even. Reason being is we've broken the low. If we come up below or above this, more than likely we can now look for demand to go to the top side and mitigate this supply. Okay, Okay, we tapped into demand and we're getting a reaction. So at this point, if we tapped into demand and you were not at break even, you better consider it, because chances are shit's about to go sideways. Okay, I start pushing away and I got taken out. So is it worth getting into these trades? I think it is. Okay, so I think yeah, I mean, we'll talk about this in a second, Miguel, but like, this is not what caused the break. The unmitigated portion that caused the break is here. But now the problem is the exact same thing as we had kind of up in this region, is now we have relatively equal lows. So you have to be careful as to which one to take here, because this is what caused the entire move. Again, if you step out to the 5 minute, you'll be able to see that a lot better, right? The wick. But now you're part of liquidity with these equal lows resting like this. So it becomes a little bit wishy-washy. And because we're at the end of the session, I wasn't looking to get into any more trades, but let's just play this out so that we can kind of see what happens in terms of price action. Oops. And yeah, once this session's over, I'm going to allow for some questions and stuff like that via the microphones. Let's just go like this. Okay, so you could have potentially taken this guy, targeted the upper area. Okay, but now we start breaking down. Okay, so like ultimately, once we broke here, we should have been at break even, right? But the problem with going to break even that soon is because we had the break of structure and we had unmitigated demand in this level, technically you couldn't go to break even, right? In terms of proper management to allow the trade room to breathe, we would swing for here and then essentially just be waiting to see what would happen. So because we've already mitigated demand, are we expecting demand to hold with equal lows sitting like this? Probably not, because we have resting liquidity, right? So we go up, we start reacting to supply. Okay, we're generating a ton of liquidity. We sweep liquidity, we go back up. Anyways, to make a long story short here, we start ranging out and there's really no available trade in terms of, like, you could have got into the long, potentially saw that we were reacting to a supply level. And from there, you would obviously want to protect your capital. You see a bunch of liquidity generating. If you're not at break even at this point, you got to be very, very careful. We're still operating within the demand level though, Pete, and you got to remember what's going on here is like we're still operating within this. So until this level kind of breaks, we wouldn't be really looking for supply trades. And let me just show you why. Okay. So this is one of these scenarios where demand gets respected a few different times. You know, it's the origin of the demand level. So let's have a look at maybe the 5 minute and see if there's anything more clear. Sorry, oh, I meant what? What did you say? I missed it. But anyways, long story short, when you start to see liquidity building up like this, and you start seeing liquidity built up like this, we're going to take both sides, man. And that's just the way that the market operates. It's just a matter of which one is going to get taken first, because now we have all of this generated like this. We had all this like this. We've come up, we've swept above, reaction, and then there's your new demand level to then maybe go higher. That's it for today's session. Hour and a half in, basically almost half the length of what the session is in real time. Yeah, that's it. That's it. So I'm going to jump over and you guys know the drill. I'm going to allow a few people to raise their hands right now. And I'm going to allow the first 5 to be able to maybe ask some questions and stuff like that. And we can try to address some stuff. So if you want, raise your hand and yeah, we'll address the questions. Okay, Ashley, you can go first.
Okay, thank you. I just had a question on how you decided to choose like a wick as a point for price to come back down and mitigate versus using the entire body of a candle.
So if a body is like partial, like let's say we got this like this, and let's say we have something like this pushing away from it, where would you, the demand zone would be here as opposed to this entire thing, because this has already been partially mitigated into the body, right?
Okay.
That's all.
Okay, thank you.
Cool, thanks. Questions, guys? Raise your hand if you have some, or if you want, we can just do them via text at the bottom. Yeah, maybe we'll just do that. So if you guys have questions right now, I'll give you a minute to just kind of throw them in the chat and go from there. So FYI, while I'm waiting for people to kind of do this, I will answer Andre in 2 seconds, bro. I'm just gonna have a quick drink of water first. Okay, Andre, go ahead, man.
Hello, thank you.
Yes, sir.
Basically, I find it really helpful, especially after following you, that you know how you say you don't place a limit on demand if you're in supply and vice versa.
Yeah.
And basically, like coming from other communities and whatnot, like I'm trying to figure out where, like for example, here in this trade, I initially had the question from here, but this is the same type of example. Like here, if price, you had this demand, I think.
Yeah.
Because price didn't reach it, then you could have played the limit here, right?
Exactly. Exactly.
Yeah.
So if this wick right here would have tapped into this demand level first, then I could not put this order. But
right, exactly.
Because we didn't tap into it, I was able to put the order.
Great. And now this is where, like, this is like from a theory standpoint, which makes perfect sense. But then applying it is very important. Like which demand you're actually choosing. Like for example, for me, I would have said that this is like the last sell to buy in a higher time frame, and it already tapped into it. Like I noticed that you use like super refined, like at the edges, which looks super clean on the on the charts. And my question is basically like on how do you sometimes you literally refine just the edges all the time, and if it just doesn't touch the edge, then
so let me clear your drawings here. So
I hope I make sense.
Yeah, you do. So ultimately, I guess that this is the demand zone right in here, right? Here, let me plot this out here. It was, oh no, I used the wick on this one, I think.
Yeah, is this, I think this might actually be a better one, because you used this wick and you wanted to take this buy, remember, but you didn't take it because the risk reward was not good enough.
Right.
I would have said that this is the whole.
Yeah. So so I guess the reason why I even took this trade in the first place from up here was based off of the 5-minute POI, right? So I wasn't looking at I was looking at a pullback to potentially come down to mitigate the 5-minute POI down here to then take it up further, because we had just been pretty parabolic throughout this move, clearing liquidity on the trend line side of things. The reason I didn't swing for this unmitigated demand zone on the 1 minute, again, this was a mistake, by the way. This is like, that's what I'm trying to illustrate here, is I made a mistake on this. And I swung a little bit too hard because I didn't take into account this demand zone. Does that make sense?
Yeah.
Okay. Any other question?
From me? No, it's
yeah, from you. If that doesn't make sense, ask questions so that it does.
It's more, it's more that like kind of like the choosing of the POI, like technically on the chart, like always looking for like the edge, like the logic behind finding this wick or refining it to this wick, how it was here on the short, on the
and the only reason I would do it is quite simply put, on this guy over here, this has been mitigated partially by that wick right there, so I was able to just refine. You can keep these whole candles. It's really up to you, but the refinement is where you're going to get your RR, right? And be able to just understand a little bit more in detail as to what's actually happening here. Same with this guy. I would take this wick, and I usually take the wicks, okay? For the record, what I usually like to do is I only take the wick if it comprises of more than 50% of the overall candle. Typically. Yeah. Now, I should have done this on this one, and that's what I was trying to illustrate, is I made a mistake here. This was a mistake on my part. I should have never really even gotten into this short, but as soon as I saw us tap further into the demand level and see a reaction, very simple, man. It's going to break even. You got to get into trades to be able to understand what's going on in the market, and this is how you learn, right?
Yeah, perfect, exactly.
Awesome. Thanks, dude.
Thank you.
Awesome. Who else? Nobody really else. Okay, give me a second. I'm just going to go through all the questions that are coming up here. Okay. Repetition is good. Ooh, let's go. aren't scared of equal highs of the entry master there too. Can I get a question in Spanish? Do you understand? I don't understand Spanish. I'm sorry. Aren't you scared of the equal high above the entry? Yes, I was on this second entry right here. 100%. It was, like I said, this was a sloppy trade. This is a bad trade, and that's what I was trying to really illustrate. There was reason for this to get swept, and I got into it anyways. It worked out. It pushed away, and then it's just about risk management. I could have easily taken a -1 at this point, but I just wanted to show that this was this was not a great trade. Okay, what else do we got here? Aren't you scared of equal highs? First time on absolute value. Looking forward to the course. Thank you. Appreciate it. Do you take partials or hard take profit? I always take hard take profit, and I trail my stops. Only move to break even, but never partial. Exactly. Hey, can we see Friday's trade? We're an hour and a half in, man. I'm not really going to go. Actually, we can jump over for like 2 minutes. Let me just clear all my drawings here. And we're going to maybe just take 5 minutes and go over that. Can I ask a Q? Yeah, ask the question. Kush, if you want to ask.
Hello, can you hear me?
Yes, sir.
Okay, so the question that I had was for the second limit that you put for a buy over here.
Hold on,
You kept a buy limit here.
Yep.
Which we missed out. But say for instance, if the price comes here and reacts to this supply zone, so then the limit is not valid, right?
Well, no, exactly. And the reason why is because we don't know if supply will take control and take out equal lows, right?
Right. Yeah, okay. And would you consider this as equal lows and probably not, do you think, in hindsight?
Well, in hindsight, of course. I mean, like ultimately, I want to see stuff like this where I can take a clear order block that I don't become a part of this liquidity pool here, right?
Right.
So it's impossible to get into. Well, not impossible. Like a lot of times, you're going to have exposure. You're going to have exposure to liquidity to a certain degree because, as you know, liquidity sits everywhere in the market. But like same with this. Like ultimately, there was equal highs sitting here, but you know, this is the risk we take because supply took control of the market here. So there's there's circumstances where it's okay and there's some where it's not. Where I typically really like to see, you know, and I'll take risk is when we see this very clear push away. And you see a very clear order block where we would likely come in to mitigate and then push away first, giving me the opportunity to be able to throw my stop loss at break even.
Got it.
But of course, in hindsight, this was easy to see. While I was trading, I was focused on getting into a trade because my session ends here and I was looking to get into a trade to potentially come to the POI, right? And we never ended up doing that. But what I do know is if I get into the trade and we push away, I just mitigate my risk, right? And if we get swept out, boom, I'm looking for trades on the other side, but I'm only looking once we break certain areas so that I can be able to manage my risk, right?
Got it. Thank you so much.
Awesome, man. Thanks. Can I ask a Q? Okay, thanks for the session. How can I know if BOS or just liquidity sweep? So liquidity sweeps, okay, in my opinion, this is a liquidity sweep right here. On a lower time frame, this is a major break of structure. However, if you were to look at this on like a 15-minute, you can see that there was equal lows that we swept liquidity and then broke structure, right? So the only time that, to answer your question, the only time I consider it a liquidity sweep is if we mitigate a demand level below it and then break structure from it. Because we're not personally, I'm not putting limit orders on liquidity sweeps. I'm looking for these areas to be able to push and break structure so that I can take a confirmation entry to then target highs. Hopefully that answers the question. So I will go out to, very quickly, I'll just remove my drawings and I will go over to the, this, and I'll look at Friday's price action just very briefly. And yeah, I'll see if I can wrap this up in like 15 minutes. But I will just kind of conclude those for the questions for today. And like I said, I'll just very briefly go over Friday's trade so that you guys can understand a little bit further what the thought process was. So let me take the bar replay, and 7:45 is right around when I get onto the charts. So at this point, we've got from a 15-minute perspective, I got a supply zone that's sitting right here. Okay. And then you also have the other thing I looked at was right here, this demand. Because we are in bearish order flow, we are aligned with the higher time frame. Hopefully I don't have to show everybody that, but ultimately there was a demand zone in here. Okay, and this is a perfect example of why I would refine to the wick, because this is what caused the break, right? So demand. Do you refine your major POIs in 5 minutes? Yes, so I always refine from 15 down to 5. And then from there, I will put my 1 mitigated or my 1 minute on there as well. A lot of times I put it within the 5 minute. Yeah, it just depends on a number of different things really, but let's I'll just show you this really quick. Okay, so ultimately we could refine now down to this level. Okay. And yeah, that's the unmitigated demand that broke structure, right? Broke levels of supply, which are sitting right here. So very important level for us to potentially reverse from. And then ultimately we had a demand level sitting right here. And again, with this, pretty simple. You could refine to this wick, right? Because this is the only unmitigated portion that caused the break. And on a 1 minute, it might be more clear. So let's go like this. Okay, so 1 minute. So at this point, again, like this for the same reason as everything else, like, could you put a limit on this? You guys don't have to answer, but like, look at all the built up mitigations sitting here, equal lows, equal lows. Like this is a scary zone to be putting limit orders on. We're getting very close to a 15-minute POI, which by the way, we should look at the 5 again and be able to go like this. Can put another zone, something like this. Oops. And pull this down like that. So this is supply. Okay, so I would get rid of my 15 personally. I like to always refine down to my 5. Totally up to you guys whether or not you want to do it. And then the other thing I would look at, yeah, exactly. I would mark this one as well. Because if I see a change of character off of this level, obviously I can start to trade it. And if we go to the 1 minute, let's go over to here. Now what we can do is take this like this, and we could refine this down to this wick. That's the only unmitigated portion of it. Do you think your trading plan thought process can be applied to London session as well? I think it applies to all sessions. I know London is a little trickier with how much it sweeps, liquidity on both sides, but it's something you'll have to back test. I know people are successful with it. A few of the one-on-one students I've had, but yeah, test it. That's the best way you can do it. Let's look at this. Yeah, so something like this. We could say that this is like the refined POI within the POI. Okay, so let's go like this, and yeah. That's basically it. I mean, we've got a shitload of equal lows here. Yeah, okay. So let's go like this. Does everybody understand how I got to this right here as the area? This is all mitigated on the higher time frame. There's nothing really, and like we're also aligned with the higher time frame here. And what I mean by that is we've broken demand, we've broken demand, we've broken demand, we've broken, and like now we're expecting to, basically this is the move that created this entire thing, right? This is the confirmed higher low by breaking above here. So this is like the little decisional order blocks that we're looking for the change of character, which is exactly what we saw here. But ultimately we're expecting this to get mitigated down in this region in order to bring higher prices. Does that make sense? So if we start like breaking down from here and we see changes of character, what are we expecting to happen? Well, we're expecting all of these equal lows, these built up mitigations to get swept into these levels. And that's why I was able to confidently take this trade. I actually ended up getting taken out for a break even on this, but the trade setup was immaculate. It worked out perfectly. Okay, so let's look at this. At this point right here, what are we looking for? Well, we're looking to see, okay, at this point, what could we take? Anybody see anything at this point that we could potentially take for shorts? Yeah. Let's look at this. So this is partially mitigated, but you could, like, I mean, I can't remember if this is the one I took or if we swept higher, but I think I actually did take this. Yeah, I think this is the one that I took. Yeah. Let's do it. Let's plug this on here. Okay, just like this, 1.4 pip. And again, the reason I don't have to swing for just this area right here, oh shit, what did I do here? The reason I didn't have to swing for this area here is because this becomes part of the liquidity, right? The buildup of the mitigations, the equal lows that are sitting like this, the mitigations like this. So ultimately, if you had your stop loss sitting here, it's going to get very attracted to this level, which is going to trigger all these mitigations, which is also going to trigger, like, again, there's nothing in here to hold price, right? So I was confident because we were aligned with the higher time frame intention on this trade, which is essentially coming down into this level right here, okay, 1 to 20R. So play price. Okay, we get tapped in, we push away. So at this point, as soon as we pushed away, which was my not even mistake, it's just following my rules. I put my stop loss to break even. And the reason why is because if we ended up sweeping above, maybe we see another change of character to get into the trade. But I wanted to be into something to be able to at least consider, you know, this is possible to reverse from. So I got taken out for break even here. We pushed away. Okay, we started reacting to very close to like a demand level. So at this point, you should have been break even for sure. But anyways, now we started looking like this. And we had the news come out around 8:30, which is right around here. And this is essentially what news does, right? It ends up coming up and, well, you could look at, ultimately, if you were taking supply trades, like this is where supply took control, right? So ultimately you would have refined down to here. Now, because news was coming out at 8:30, which is essentially the next candle, I stayed out of a scale in. I wanted to be able to see how the news reacted. We had liquidity sitting above here. You know, like we could have come into this region. There's all kinds of different things. We could have swept liquidity and come up into here, then seen a change of character. So I was just being patient at this point. It was Friday. Typically, I don't really like trading Fridays, just to begin with. It was part of my trading plan prior to Smart Money Concepts to never trade Fridays. But with that said, let's just move this over to show you that, you know, ultimately this would have ended up working out regardless. We've now cleared liquidity on both or on the top side, and let's play price. Okay, we get the retracement. Okay, we sweep one last time, and ultimately demand is in control of the market from this wick. So as soon as we break down from this wick, you know, now we would be able to put an order on something up in exactly in that region, because there's equal highs resting, something like this. You know, I wouldn't be putting orders on this order block personally. So let me just move this shit out of the way so that we can kind of see. And what do we know about very valuable order blocks? More than likely they take liquidity, right? And that's exactly what this one did, is it took liquidity and then broke to the downside. So that was my trade setup. I mean, I can play this all the way through. You know, you could have potentially taken this guy as well. And I think some of you guys did take this, but this was already partially mitigated, right? So, and you're contributing to equal highs. You know, the only thing that was really unmitigated here would have been this wick. And you could have considered that. However, personally, I wasn't taking any trades after getting swept out and it was high impact news. So I just said the hell with it and I stayed out of the trades for the day. But ultimately, I just want to show you guys how this higher time frame intention just plays out almost to a T. And as soon as we break above this, what can we do? We're going to look for longs, right? Okay, so we break above. So where's demand and control from? Yeah, you could say this, you could say this, you could look at the 5 and just get a better idea. Exactly, cool. Whoever said 5 minute, good job. So 5 minute, pretty simple. Let's take this, right? And because we moved away so rapidly, it was because of news, right? The second set of news that came out that day. Let's just go like this, put demand on here. Could you have put it in a trade? Sure, why not, right? There'd be no reason you couldn't. So let's just say that you did for whatever reason. Okay, you didn't quite get tapped in, but you get the idea. Demand kicks into the market around these levels. Obviously, I wasn't in the trades. As you guys know, like this would be essentially my order block sitting right here, okay? Because this is the wick, and yeah, I have a 2 pip stop loss limit. So if we wanted to just measure this out, you can kind of see, yeah, 20 pip stop loss doesn't really fit into my criteria. So that's it for Friday. Give me a second here. I'm going to just look over at the messages. Do you think your trading plan, how do you refine this current demand? This one right here, that's like sitting in the wick, you don't. You wait for the next day because this is high impact news and price is going to look like this probably for the entire New York session until it cools down. It got tapped in on the forex.com feed. That's likely. It happens. This is what happens when you use, like I use Oanda as my data feed, and the reason why is it aligns better with my broker. So that's the only reason I use it. But yeah, in terms of, you know, how do you get into something at this point? There's a couple different options. One is you come back the next day and you have just easier price action to really analyze. And the other is if you are a seconds trader and you use like the 30, the 15, 5, the 1, whatever the hell it is, seconds, you can maybe look for trades a little bit easier on those timeframes. Equal lows, below previous, yeah, exactly. Equal lows, 100%. And here's the thing is like you go to the 5, let's have a look at this. Like there's a demand zone just underneath this. There's equal lows resting here. But here's the thing, these lows should be protected at the extreme. Why? Because they broke levels of supply all the way up, right? So if we come down into here, you wouldn't put a limit order, but you'd look for a chalk somewhere in here to then target supply levels, right? All about realistic expectations. Thanks, boss. First time and has been one of the best backtesting sessions I've been a part of. Cool, man. I appreciate that. So listen, guys, I'm going to be taking a break from the backtesting sessions. Like I said, I just want to be able to give undivided focus to the masterclass students that are coming up in September. I will try to sneak one in maybe middle of September, give you guys something to kind of work with. But yeah, as it stands right now, like I said, it's just crucial for me to be able to focus on what deserves my attention. Hopefully you guys can understand. If you are considering or on the fence about a masterclass, maybe you're not sure about the time frame, maybe it doesn't quite work out with your schedule, shoot me a message. If there's enough demand and I fill up all the Sunday slots, I will be opening up a Saturday or possibly a Friday. I'll be holding all kinds of polls on the Telegram group just to annoy everybody who doesn't want to pay for anything. But ultimately, I just want to be able to accommodate the people that are really interested in potentially taking their trading to the next level. What it includes, of course, is the 6 weeks that we meet up the same time every single week, 90 minutes. And in addition to the 90 minutes, at the end of the session, I do a Q&A, very interactive Q&A for 30 to 45 to maybe even an hour, depending on how many questions we have. You'll be getting homework assigned to you, whether it be reading a trading book, whether it be backtesting certain sessions, whatever it might be. You'll also be getting a 25 to 30 page PDF version with entry models, screenshots of my entire trading plan. And then on top of that, we will be doing the final thing, which is either going to be a week after the sessions are done or 2 weeks after, get everybody to pay for a funding challenge, and you'll be able to join in on one single live trading session with me during New York to, it's not to give you signals, it's to copy trades though, copy trade ideas. We'll be able to talk back and forth via Zoom and be able to just understand why I'm getting into trades. And at that point, after the 6 weeks, you shouldn't even need me, but it'll be kind of like the icing on the cake to be able to pass a funding talent or FTMO or MyForex funds. So that's what you get within the masterclass. There's 6 spots left right now. If you're considering it, man, do yourself a favor, is it great money for me? Absolutely. I would love to have your money, but at the end of the day, this is about you guys. It's about being able to actually take yourselves seriously as traders. And if you like the style, man, and you like the idea of only trading 3 hours a day during a session, I'm your guy. Like, this is what I do, right? So if it's not quite resonating with you, I'll be completely transparent. There's tons of guys that swing trade. I could definitely recommend Phantom Trading. Go check out Albie, go check out Nora, go check out who else? Blackwatch. All of these guys trade more of a swing trader style, hitting 1 to 50R, 1 to 60R, 1 to 80R trades at least once a week, it seems. So I might not be the mentor for you, but if you like the idea of intraday, you don't have time to be spending constantly looking to see if your POIs are met, then this is the strategy for you. And if it is, you know where to find me. Shoot me a DM at any time. I'll try to answer as many questions as possible, pertaining to the masterclass, of course. And moving forward, I am going to be stepping away from answering every single DM I get. Unfortunately, I just don't have the bandwidth for it right now with the increased following that's happening over the past few weeks. So yeah, man, anybody who's in the masterclass in September, sick, we'll see you real soon. Expect some stuff coming out to your inboxes this week. Just wrapping up the final touches. Hopefully by Wednesday of this week, I'll have the 25 to 30 page trading plan out to all of you guys. But yeah, that's it, man. Thank you guys for the ongoing support. This is the last one for a few weeks, and yeah, we'll catch you guys on the flip side. So thank you very much again, and we'll catch you guys hopefully in September. Take care, guys. And by the way, the last absolute last thing I should say is the recording will be available at some point later on this evening. If not, and I don't get it out tonight, please don't haggle me and ask for it. You just have the whole session. So worst case scenario, it'll be out tomorrow night around 7 p.m. Eastern Standard Time. Awesome. Thank you guys again, and we'll talk soon. Good luck tomorrow. Peace out, guys. I really hope this recorded.